This week on Upside, we're talking about Trump, Greenland, NATO, defense spend. What does that mean for the European ecosystem? Meta buying Manus. What's going to cook there? Energy deals are plenty. We've got a few surprise IPOs sliding under the carpet. The FTSE's outperforming the S&P and nobody knows or cares, but we're going to talk about that. We've got a mega massive AI corner, especially driven by CES in Las Vegas, and deals of the week. Now, first up, Lomax, one of yours, ChatGPT at time of recording was last night, the Wednesday, I think it came out. I guess there's not much to talk about yet because it came out on Wednesday night, but what's the deal? What's going to happen?
So OpenAI have released a specific health ChatGPT for everyone apart from in Europe, it seems, as is usual, customary these days.
Yes.
So we haven't had a chance to try it out. As I've said on the pod before, I mean, I already use, and lots of people already use ChatGPT for health advice. I think the real difference here is, so this is a health-specific version of ChatGPT. They're effectively saying it has higher levels of encryption to protect safety, data and patients. So, I don't know. There's a lot of hate for this on Reddit, actually, interestingly. A lot of hate.
Is there?
And definitely, use with care. Whether you're using, normal ChatGPT or the health ChatGPT, clearly you should be using with care. As I've said before, I regularly use ChatGPT, upload my own blood tests and results and query them. And I think if you use it with a healthy dose of skepticism,
as you should with any
fine.
LLM, right?
Yeah.
Anything you put in, you should not take it gospel.
But I think it's great as long as it's used with that caveat in mind. One thing I would say is
this is private, right? So this is a non-learning. This is you connecting your Apple Health Kit, Android Health Kit.
You can connect your wearable data. You can upload your EHR. You can upload blood tests or whatever, imaging results or whatever you have and query them. I mean, to be honest, a lot of that you can already do with the existing ChatGPT. But
so why launch it?
Well, firstly, I think is clearly there are a lot of people who quite rightly are worried about safety of confidential information. And basically that's why one of the key descriptors of why do this is that they have an enhanced encryption for this data, right? To encourage more people to do it in this kind of more siloed way. I would say it's very timely because this week, which has coincided with CES, where it was announced by the FDA in the US has announced a couple of things that I think are very, very interesting from the point of view of the application of AI to healthcare, both in hospitals and consumer. Under Trump, as we know, there is a sort of wave and push to deregulate things and to make things simpler and less bureaucratic. And Marty Makary, a wonderful alliterative name, who is the head of the FDA, has stood up this week and say he wants FDA regulations he wants them to move at the speed of Silicon Valley. I mean, who the hell would have thought that you'd hear that from a regulator? I guess you'd never hear that from a European regulator. But there are two things that caught my eye this week, what the FDA's done. It's done a couple of things. It's very, very interesting. Now, the background here is, AI in healthcare is not new. And before LLMs, we had a whole wave of effectively computer vision companies taking AI, applying it to images, so CT scans, MRI scans, ultrasounds, X-rays, and coming up with AI products to help clinicians make decisions, help radiologists to make decisions, right? So they can look at the CT scan and look for lung nodules or whatever it may be, cancer, etc. Now, the FDA was very, very strict on these at the time. This is 2016, 2017, 2018, and this is a medical device. We're going to regulate this like hip replacements, like catheters, like pacemakers, right? So a lot of startups raised a lot of money. I invested in some, maybe you guys did too. A lot of our friends did. A lot of them came out of Europe, out of the UK, out of France, and obviously the US. To the point where we have now over 1,000 of these devices, software as medical devices, approved for use in healthcare in the US. Now, those startups, to get through the FDA regulations would have spent a lot of money. There's like million is both time and, cost, regulatory advisors, etc. To the point where there are now 1,000 devices. So what we've got is is a whole bunch of startups have gone through this onerous FDA process to get their clinical decision support AI software regulated.
That's
Now
irritating,
the
isn't it?
FDA came
Oh,
out
my
this week
goodness.
saying you no longer need to do that. So it's great news for companies going forwards. It's bad news for companies that have already, thought they had a big moat. Secondly, on wearables, so on slightly more consumer side, they are taking a much lighter touch as to how they classify them as med devices. It will depend along the claims that you make. So clearly, you can't make claims this is a medical grade device to monitor X, Y, Z. But basically, what all of this is the FDA is saying being more permissive, cutting red tape, making it easier for health companies to get to market.
Has it happened? Is it already in action?
Well, they made the announcements this week. I don't know whether it takes effect this week. I think it is immediate effect. So I think this is exciting, and this is relevant to Europe because, quite frankly, most European health tech companies, one of the biggest go-to markets is in the US. I mean, the US spends roughly 20% of GDP on health, right? So it's the biggest healthcare market in the world. So it's hugely relevant. The doctors and the medical community, I'm sure, will hate this, and there's probably some listening to this who are outraged by it. And of course, there will be some negative fallout from this. But this is the way that the US is moving at the moment across many verticals and disciplines, and it's an interesting time for sure.
So one thing that's often popular in the medical community is to get a second opinion, and it can be really useful because it seems that if you got two doctors, you have three opinions, right? So it can often be useful to hear what other people think. One of the things that are super useful about the LLMs is you've got at least 4 really, really powerful frontier models readily available. And one of the things that's not too hard to do is if you implement Claude Code, is to set up a little MCP. It's got a model context protocol, and then feed in whatever context you have, whatever symptom you want to analyze or your blood test or whatever, and then have it query all 4 LLMs at the same time. They don't always agree, but there's a beautiful way of reconciling them. So you get back a report saying, well, 3 of them thought this, and the other one had this perspective on it that should be added. It definitely enriches the analysis. So if anybody hasn't played with this yet, I highly recommend it.
Oh my goodness.
I think this goes back to just like, how is society tooled to use LLMs for more complicated things like this, right? Because
that's why I think ChatGPT Health is such a good idea, because we need applications. The raw models themselves, I mean, come on. Yeah. You need scaffolding on top. So what I've described is kind of a bit of a hacky way to do it, but there's no reason why you couldn't do it in a more application hardened way that's good for consumers.
And we shouldn't be saying to people, don't use ChatGPT for legal advice. Don't use it. Don't use the LLMs for health advice. It's rubbish.
But you know why they're not? I mean, why they are saying don't use them for X. It's because they are taking that word. So you almost have to work out maybe the 4 LLMs
that's my point.
The answer.
That's my point is I would rather see an investment in educating people how to actually use and interpret these tools and know their limitations and be able to act accordingly. I think rather than just saying to people, don't use it, go and speak to a lawyer. It's like, what's the point in having the technology in the first place?
But we live in a world where people believe Fox News, Lomax. I mean, I don't know how you would educate the masses to be able to use LLMs in that educated way. But then maybe your vertical kind of hacky four LLMs in a pod is not a bad solution.
No, but that's too hackery. I think that this goes back to education as well and school. Layering how we use technology in school is important.
Yeah, I thought we were going to get bang into, does the government really want to educate people? I thought we were going to fall into that argument.
Oh no,
let's not go there. Well, I think we do enough politics already, so let's be careful on that one. But hey, well, no, we are going to stay with politics because we can't not talk about Trump, Greenland, NATO, defense. What's happening now. Mads, our resident Dane, obviously you are naturally irritated by this, I would assume. So give us a bit of the history and tell us what's going on, and then pair it back to how it's going to affect us in Europe.
Well, everybody's seen the headlines. Trump, he's wanted Greenland for a long time. He has said that the Europeans and the Danes specifically can't defend it. It's at risk of being overrun by belligerents from China and Russia, and it's a big island, and therefore the U.S. needs this island. And as he's been saying that for a while, and then of course what he's come out now to say, the White House has sort of said, military initiatives or interventions are always an option, and it's been rather odd because, it's been, Greenland has been part of Denmark for, hundreds of years. I mean, kind of the relationship. Denmark has had a presence in Greenland since 1721. So it's kind of before the United States was founded. So it's kind of something that goes back for quite some time. And Denmark has historically been a strong ally of the United States. It was a founding NATO member. It's kind of one of the original 12 back in 49. And in 1951, so after the Second World War, the United States tried to buy Greenland. And, they didn't think that was a good idea. So in 51, a defense agreement was made that sort of gave the United States more or less permanent jurisdiction over Thule. It's kind of this military base. And the Americans, they've been able to have, host kind of nuclear bombers there, and they had a missile base. And so kind of you have a 75-year history of the Americans pretty much being able to do whatever they want to do there anyway, which does sort of make somebody wonder, well, is this really about defending the island, or is it about something else? We know that during the Cold War, the Americans had as much as 10,000 troops stationed there. I mean, let's be honest. This is not a beach resort. We say an island, but it's pretty frigid. So, and they pulled it back to 150 troops now, and it's probably not a nice place to be sent. I imagine there are not that many volunteers. There has been a precedent for trading islands between the countries. Back in 1917, the United States bought the Danish Virgin Islands in the Caribbean. But you had a specific situation. There was a referendum held at the time. People voted yes, all that stuff. Whereas in Greenland today, kind of the position of the Danes and the Europeans really is, look, this is a matter for Denmark and for the Greenlanders, the people that live there, of which I think close to 90% are saying absolutely they have zero interest in becoming American. So it's an odd thing.
That poll was, 18 months ago, wasn't it? I've not seen a recent poll. I've not seen a 2025 poll.
Yeah, I don't imagine it's gone up much. Of course, some people are arguing, look, there aren't that many Greenlanders. The United States could offer each one $1 million, right? And tax-free for the rest of your lifetime. And that would be a rounding error in the U.S. government budget. And you might get access to lots of minerals and oil and other things. And maybe that's what ends up happening. But I think the thing that's so odd here is just going back to kind of Pax Americana and the world order after the Second World War, there's been the grand bargain, which is the kind of the United States is the guarantor of, if not world peace, then peace in the Western world, right? And we'll secure that. And in exchange, we're going to buy their stuff. And we're going to feel good about buying their stuff, unlike what's happened with the Chinese, like Huawei tries to sell, telecoms equipment, and, Europeans say, no, we're not going to buy it. The Americans, they sell super, sensitive stuff like military hardware and comms equipment. And we're like, yeah, come on, bring it in. We're happy. We're all friends. That was all founded on Pax Americana. We're all trusting each other. And it just seems like that hasn't been fully thought through. But I can't imagine a European government that right now hasn't started thinking about, we are spending a lot of money with Microsoft. And is that the next thing they're going to switch off? Right? And so on and so forth. And so it just seems that, the surface level, yes, I know Trump has been unhappy with the amount of money that has been spent policing the world, but I wonder whether they haven't actually made more back in terms of commerce and sort of just the ability to sell all their tech and defense.
Short-termist though, isn't he, really? And he's so transactional.
Look, here's the thing. The only people using casual violence to negotiate, those are mobsters. And it seems like a very odd, you say short term. I mean, we sometimes talk about a deal maker and trying to make deals, but it seems like you do a deal that's good in the short term, but where's this going to lead longer term? Those are some of the questions that are going around.
Well, I mean, he's got a long list of precedents about short term mobster style transactions. Lomax, got any notes on this one?
I swing from one extreme to the other on this. I can see a world where we're just like, quite frankly, it. Like, the French sold Louisiana or Napoleon sold Louisiana to the Americans in 1803 or whenever it was. It was a commercial deal. I think now it's no longer in fashion to be in the business of buying and selling countries. Now I think we now need to actually consult the people that live on the ground. So I think, let the people of Greenland decide, quite frankly. Look, I do think from a defense perspective, Greenland is hugely important particularly from the US perspective. And if we're still in the kind of throw our lot in with the US and the whole Western hemisphere, then, why not let the biggest, effectively the only real Marshall economy that now has just, signed a $1 trillion defense budget for 26 and has just announced to push that up to 1.5 trillion for next year. Why not let them just, run the defense side of things, particularly given it's on their side of the Atlantic?
They do that today.
Yeah, well, as Mads says, de facto, that's the position rather than de euro, right? They could always scale that up from the
de euro.
100
There is an alliance. There's a treaty signed in 1951 giving them more or less free reign.
They've never said no. The Greenlanders have never said no. Denmark has never said no to a military presence from the Americans, as far as I've ever read. This is minerals, mining rights. This has got nothing to do with China or Russia. This is to do with money, surely.
And so the question is, I mean, it's not as if this is newly acquired territory for Denmark, and Denmark has been funding Greenland. It's not a profit center today. It has been funding it for hundreds of years. Is it right that there's just kind of a forced cessation of that territory, and then the Trump administration gets to profit from the minerals that are there? I mean, it seems like a slightly odd way to treat an ally.
Yeah.
Is there anything that we can kind of pair back to investing maybe in the defense space, the resilient space, any kind of knock-on effects that we can marshal?
Well, it's resilience and sovereignty. It's kind of two things, right? So we need to increase our defense spending because we are weak right now, and that's why the situation is the way it is. And we need to make sure we have more sovereign capability.
So it's just another nail in that coffin, right? It's just another mistrust. It's just another saber rattling reminder that we need to be more independent and self-reliant. But there's nothing.
Another brick in the wall.
Another brick in the wall. It's just it's so interesting. And I know that you shot me down in flames for saying this last time, Mads, about the paralleling this between Nazi Germany and then going and conquering and taking resources because they were running out of money and to deal with their own deficits. But this feels like Venezuela and Greenland, and what else next will they go and rob to try and bolster the coffers? It just feels like this is part of the thing.
I think the words that were used were they don't have an alternative. And I think all I'm saying is I do think there is an alternative. It just requires kind of some more political will to make the reforms at home that are required.
Yeah,
it's always easy to rob somebody else's stuff.
That diplomatic political will doesn't seem to be there. It's just going, let's do it. Executive order. Boom, we're in. Who needs Congress to pass anything? Let's just go, do it. Actually, talk about rules and regs. So France is now looking to ban social media for under 15, just to change tack, following Australia. And if memory serves, Norway and I think Denmark or maybe Sweden were either thinking about or have actually brought into some kind of regulation around stopping younger people from using social media. But don't quote me on that one. But mobile phones, have been banned in French primary and middle schools for 8 years now. And it looks like they might also be banning them in high schools. So I guess, Lomax, give us a bit of background here. And I guess my main kind of questions, is this going to be more of an irritant to Trump? And is this going to be more of a whipping stick to kind of get, you're banning big tech and you're stopping my companies from doing what they need to do? So that was my angle on this, but also quite interesting that more countries are now looking to ban social media for youngsters.
Of course, not like entirely directly at all related to Greenland, but still like consistently driving a wedge between the EU and the US in respect across many, many different areas, right? So France, as you said, is planning to ban social media for under 15s and mobile phones in high schools now from September 2026, so later this year.
Is that actually happening? I thought that was just an idea. Is that actually
so their
happening?
plans to? Sorry, they need to push it through. Australia did this for under 16s in December last year. Look, France has already started. We talked about this before. France has already started to make steps in this direction. In 2023, they passed a law, which I think this is a kind of messy middle ground law where for under 15s, they have to get the parents to consent for them to access social media. But I think that is fraught with practical difficulties, as you can imagine, right? Look, Trump will clearly hate this. There's no love lost between particularly France and Macron and Trump anyway. And Trump will see this as an attack on US companies, big tech as it is. Look, and this will feed into the narrative of yet more claims of like European regulatory overreach, right, and nanny state
Especially
behavior.
when they're going the other way and loosening and freeing.
Correct,
and then
exactly. As we talked about in the context of health earlier, where the US cuts red tape and deregulates and generally becomes a bit more libertarian, the EU continues to move in the other direction. But you know what? Like I'm always berating the EU Commission or whichever, the ECJ or whoever it is in the EU, the Parliament, for overreach in respect of technology regulation. But you know what? I think this is one where this is too important. I mean, this is kids. This is the future. And even actually, I dug out a report from the US Surgeon General recently, which said, okay, looking at social media, mobile phone and social media use in teenagers. So, clearly they said 95% of youth between 13 and 17 report using social media platform. Well, no new surprise there. But almost more than a third say they use social media almost constantly, right? So, look, what do I think here? Regardless of the EU-US thing, I'm sure big tech will survive this. Like, if a bunch of teenagers in Europe, have access to social media taken away. So I think from a kind of commercial perspective, they can ride it out. You could also argue that, quite frankly, standing up compliance for this is quite expensive. It actually almost creates another moat for them. Like imagine new challenge, the next Snapchat wants to come through, etc. But it's going to make it very, very hard, right? So you could also argue it gives them even a little bit more of a moat. But most importantly, commercially, they'll ride it out. And I'm afraid
teens will find a way. I'm sorry, but teenagers will find a way to circumvent any rules, I'm sure.
Yeah, that is very true. But I think at least we should put a couple of fire breaks for the teenagers to try and break through it, because I think this is way too important. The amount of speed bumps, the amount of people that I just see zombified from these friends, and a good friend of mine actually in the UK is running a campaign now to remove mobile phones from schools in the UK, which is actually spearheaded by a student herself who was exposed to horrific videos from her fellow students. It's just this is enough. This is ruining the safe space that it needs to be for me. So
my kids are too young, but my god kids, they don't use that much social media. There's a bit of a movement and my god kids are anywhere between 14 and 20. Well, the oldest is 21 now. So and I've got 8 of them. And I speak to them quite regularly about what the youth is doing and how the youngsters think about these things. And they don't use social media as much as they did. Like when they were all coming through, they were all over Instagram and X and whatever else, Snapchat and TikTok and TokTik. But now they're not. There's a bit of a mood shift in young people as far as my small sample.
This is one where I'm very pro. So.
Yeah, I am too. Staying with social, Meta buying Manus. Now, my assumption here is Meta needs to accelerate, needs to kind of catch up with the other foundational crew, and they're using this as a stepping stone and as a leapfrog. Mads, is that a fair assumption?
I think so, absolutely. So we've seen how the kind of in the whole world of agents, the application layer has taken off, whether it's Cursor, kind of the first kind of real application that shot through the roof, and then Claude Code, of course, that's taken the world with storm, kind of this command line agentic harness that you can use to code, and so many other things. Where you could say Manus is almost on the consumer side what Claude Code is on the developer and more sort of pro user side. It's a beautifully made platform. Kind of founders coming out of China, moving to Singapore, setting up there because they specifically wanted to build a company that had free access to sell to the West, to raise investors from the West. And they raised capital from Benchmark, which of course is one of the top firms in the world. And that was only back in April. And so I think Benchmark invested at a 500 mil valuation and now to build the other way. So yeah, it's been great for them, and it just goes to show how important applications are. It's not just about models.
What did it sell for? Was it $2.5 billion? I couldn't pin down the exact figure.
Yeah.
Staying with big chunks of change, Kraken. I thought this is really interesting. Kraken's this kind of happened under the carpet. I think because it's not kind of whoop cool American tech. It just didn't really kind of get the same PR. But Kraken being spun out of Octopus Energy. I think for Bill, I think D1 are the lead in the deal. Mads, you can correct me if I'm wrong, But I also didn't realize they're doing like $500 million in contracted revenue. This is a big thing that was kind of snuck inside an energy company in the UK. I think they're just UK. Mads, what's the deal here?
Yeah, look, it's a big tech company that's hiding in plain sight. I think the valuation is what, kind of 8.5 billion. So Octopus incubated the company, and it's a company that's used for metering, but also to manage energy flows, especially around some of the grid stuff that's happening. And they're spinning it out because they serve competitors. And I think Octopus had to let it go to let it grow. So exciting that there's a European champion coming out in the space. I don't know if their revenue is 500 mil yet. I know we've seen 500 mil contracted, but I think some of that might be multi-year contracts. So I think you have a 500 mil backlog. Otherwise, it's pretty cheap, actually. Kind of a company growing at that clip, if you have 500 mil of ARR, that should be valued higher than 8.6 bill if you're growing at the speed they are. But yeah, exciting and great. Good for them.
I'm a customer, and I do believe that execution is going to be part of the moat, ongoing, forward-looking, especially for AI companies, because there's almost no excuse for an elegant execution, whether you're B2B, B2C, whatever you are. So I do believe that part of their growth, and because Octopus have always been just really bloody good at delivering products that work. And I didn't know that Kraken was part of this melee. I just thought it was Octopus Energy. But it's just a really good offering. So all power to them. Lomax, you got any notes on this one?
They built an incredible business with Kraken that, quite frankly, Kraken will end up superseding the size of Octopus Energy at some point.
Octopus Energy, they don't seem to be that profitable. I was trying to dig out some of the figures, but maybe that's all on purpose. I mean, who knows how accountants would like to present.
It's
figures,
a bit like space, SpaceX and Starlink. Like the Starlink is an absolute behemoth of a business, and that they were planning at one point to demerge them. Although now it looks like they're going to IPO the whole lot together. But Starlink's the real cash cow within that organization. It looks like Kraken is the same. Well, they've opted to go down the demerged route.
But I think it's love that. Demerge. We're going to demerge. We're going to consciously uncouple, my darling. Talking about IPOs, Discord looks like they're going to IPO. Felt like they kind of snuck that under the radar. Discord, the chat app. Mads, what's cooking here?
I just super exciting to see another company being mooted for an IPO. I mean, we'll have a real bumper year if Trump doesn't go completely crazy with invading.
We need it for our 26 predictions, don't we? So bring on the IPOs.
There you go. We didn't have this one on the list, but it looks like they're approaching a billion in ARR, which is fantastic.
How?
And it's so this is it, right? This is it for old timers like us. How do you really explain this? Discord, it's an app that sits on top of kind of the whole world of gaming, and gamers can use it to communicate, and they're custom. So it's a freemium product. You can use it for free, but then you can subscribe to get custom emojis and animated profiles and status symbols and other good things. And you sign up for a subscription, and bada boom, bada bing, and you got a $1 billion revenue company. So well done them.
Wow. And Revolut are looking to buy and build and getting into the Turkish market using the digital bank FUPS. This looks like a smart strategy. Lomax, you've got some thoughts on this, I know.
Well, no, I just think, look, it's Revolut is on an absolute tear now, right? So 65 million users have stated desire to get to 100 million users by mid-2027. Turkey is a massive market, 85 million people. It's actually the biggest, Germany's 84 million people. So Turkey as a country is the single biggest country if you include it. It's not in the EU clearly, but within broader Europe. This is effectively acquiring a banking license, right? You're acquiring a small...
You're buying access, right?
Yeah, which is like, you still need to get, what do you do when you enter a new market? You either apply de novo ab initio for a new license, or you buy a company that has an existing license. You still need the regulator to approve the transaction, but normally that's easier. So they still need to wait for that to happen. Don't forget that, Revolut still hasn't got its full banking license in the UK yet. That's still coming through, but it is building up a very, very interesting suite of licenses now. And it now has permissions in Mexico, in India, in Australia, as well as obviously its core Lithuanian banking license, which is the EU full license. So, look, it makes complete sense. The business is unstoppable. The only question now on Revolut is like, barring some major, I don't know, cyber attack or major regulatory failing, which can happen in banks, can they be a $200 billion company or can they be a $1 trillion company? That's the kind of big question now.
Aren't they on our IPO list? I know that the UK exchange was looking to push them to do UK, and
yeah, but they're not going to IPO in the UK.
No,
no
and
way they're gonna do that.
I think I read the quote was something like that would make no sense, or something was the retort to the request. But it looks like they might be one of our 26 IPO listers. I think.
I think they need to get.
I don't think it's not a 26. I think it's a 27 candidate.
They got to get that full UK license first as well before they IPO.
What's the hold up? Do we know?
Well, they've got the license, but it's still subject to limitations.
Isn't it?
Well, I don't know. I mean, Rachel Reeves is probably like harassing the PRA, the Prudential Regulatory Authority, just to tell them to get that, just to get it bloody done.
I wonder what the real story is there behind the scenes.
Well, I'm sure the real story is you can read about it between the lines, is that some of their, whatever you want to call it, compliance, record keeping, whatever, has a little bit of a kind of Silicon Valley startup style.
It's always been a bit grey flavored, hasn't it? It's always been a little bit. We need to squint at this one.
Well, the flip side is you build a lot more slowly and cautiously, and you have that kind of higher degree of hygiene, but you probably wouldn't have, you wouldn't be on the cusp of 100 million users, customers.
But they're on the. I mean, surely they're on the edge of not really giving a monkeys about the UK. I mean, if they keep expanding and then buying access, at what point do they go?
Well, that's very true. They've already got an EU license, and they've already got a full license in Mexico, I think. And again, they got an Indian e-money license. Yeah, you're right. You're not wrong.
UK pension funds also in the news this week for all the wrong reasons. Two main key stories that I saw. One was them kind of kicking back to the government saying, look, we're not a plaything. So kind of the backstory here is that Reeves has introduced legislation to enable regulators to force a minimum amount of investment via pension funds into privates. So, and they've kind of kicked back and, well, hang on a minute, don't use us as your toy. But the main story and the main thrust of the story was that there was I think the quote was, you're better off putting your money into a high interest bank account because they're underperforming and really poorly performing. But Mads, what's the real story before I eat my words?
Yeah, so I think it's not, I mean, to be fair, it's not all of them that are underperforming, but some of them are, to the tune of less than 1.5% annualized return, which is pathetic. Right? And
especially with inflation at whatever, between 4 and 8 over the last few years.
Basically it's just value destruction. There's so many aspects to this. Of course, the trustees and other people in the sector are right to say it's not a plaything. These are people's retirement incomes in the future. But the challenge is we've engineered risk out of pensions. We've created a system where risk is seen as something bad. And as any investor will tell you, risk and return comes together. You have to take risk. And the way you minimize the risk and maximize the return is via portfolio construction, is via diversification, is by having the right mix of investments. Whereas instead of what trustees are incentivized to do today really is to minimize fees and minimize volatility. And then you end up in the rubric that says, well, let's maximize bonds because that's where we have minimization of fees and volatility. And it turns out that this fee obsession just puts everything backwards. It's really the net returns that matter. It's much better to pay a good manager 2% to deliver 15% than to pay them 0.1% to deliver 5%. But just focusing on the cost, we're forcing ourselves into the wrong returns. But it turns out if you have funds that are large enough and sophisticated enough over a long horizon, you can deliver very healthy returns. Now, Svensson, he proved that at the Yale endowment, had much more of a private strategy, delivered 13% plus annually. And that's what we should aim for, right? So we probably do need to merge some of these smaller schemes so they have more resource, more expertise, and can do more stuff that's not just, how can I find the cheapest tracker or the cheapest mix of bonds and then deliver these ridiculously poor returns.
But how can they do 1.5 in bonds? I mean, surely just by closing your eyes and doing bonds, you can do more than 1.5. That just makes no sense at all. Lomax, you got some numbers on this one, haven't you?
Well, I just think, look, I mean, there's a couple of things that we've talked about this before, and there's a lot of chatter about it in across policy and venture circles, right, in the UK. Is how do we get more pension money in both the UK and in Europe?
Just to qualify that, if I remember correctly, there are only 17 firms in that pot. If either of you know that, I think that's right. I mean, check me, but I think
very
there's only
small
17.
Amount. So
yeah.
there's roughly £3.5 trillion of pension money. When you think about big pools of capital in any economy, like the pension is one of the biggest, right? And in the UK, it's £3.5 billion across defined contribution and defined benefit schemes. It's 110 trillion. Sorry, did I say billion? I meant trillion. It's roughly 110% of GDP, right? So it's a healthy number, and the numbers are consistent across Europe. In Amsterdam, I think it's 200% of GDP. But as
there are
Matt
six
says,
other countries. I think I remember also seeing there are 6 other countries where their pension pots are larger. I think Sweden or Switzerland is top of the list, where the pension fund is larger than the market, or what was the right?
Larger than GDP.
Larger than GDP.
And Australia and Canada are both like big super savers.
Yeah, Canada, Australia.
Super savers, yeah.
Yeah.
But the point here is like, how do you get this money in? So you can force. So first of all, I think you need to create the permission to do it, the legal framework, and that still needs some work. In the US, they did this, and I think in the ERISA, I think it was the ERISA in 1956 or something. They changed the law to make it easier or more to free up the ability of pension trustees to not face liabilities for making investments in riskier assets, right? They can think about investments on a whole of portfolio basis on a much more longer term lens. So you need to create the permission and framework to do that, which actually in EU and UK, we're not quite there yet. So there is a kind of regulatory piece. There is also, do you get the gun out and put it to the heads of the trustees and force them to allocate? That is a solution mooted by, currently by
That's
Rachel
in
Reeves.
effect, isn't it? Isn't it 5% the mandate?
The mandate, yeah, but I can't. But what happens if they don't do it? What's the penalty?
I guess. Well, this is where the kickback to we're not a plaything came from.
And I've said this before. There's like exactly. There's every time like a sector needs more money, the pension trustees always like put a tin hat on because people are going to come after them. But the point is this, which I think you need to create the performance to incentivize, get the market kind of fix this. Because just look at this, right? I was looking through the Cambridge Associates. So Cambridge Associates produce every quarter benchmarks. So they're an investor, both their clients and themselves. They're an investor in hundreds and thousands of venture funds. And they pull all of that data together and they show the kind of returns across all of that. Now, I was looking at the top 5% of net IRR. So top 5% performing funds. Net IRR. Net is net of fees. So forget about fees. And IRR is the internal rate of return, right? So the annualized return. If you look at venture, right, you go 2010, 53% net IRR. This is by vintage. So each year I'm talking about is the vintage of the fund when it was created. 2010, 53% IRR, 2011, 46, 2012, 57, 2013, 42, 2014, 40, 2015, 35, 2016, 37. So it comes down a bit. You get the picture. It's in at around 40 to 45% net IRR, right? And you were talking about, these guys trying to produce between 3 to 5 to 6% growth a year. Like you need to have an element of your portfolio trying to get after these returns, right? And like the performance is there, but the problem is that requires a level of sophistication to try and get access to those funds because it's very, very hard to do that, right? In a way, people like Yale, you mentioned David Swensen, Mads, who was the big guru at Yale who kind of pioneered the investment framework of having a much higher allocation of your portfolio to privates, including venture. Funnily enough, I was actually thinking it's like they stole a march and basically secured the allocation for life for Yale. Yale got into those funds when it was probably quite easy to in the 80s and is now in there forever. Whereas if you're Cambridge in the UK and like, well, actually, I'm just going to start allocating to venture now, or Cambridge as an endowment. But if you're a pension fund, if you're the railways pension or whatever, the coal miners pension fund, and you say, I want to start accessing these funds, it's very, very difficult now because it's kind of dead men's shoes, as they say, right? Or the equivalent. However, I still think it's worth going after that.
100%. And I also think to some extent that the premise there is that we live in a zero-sum world, whereas we're just moving money around. Whereas actually I think the argument we should be making is, look, we are living in a low-growth Western world right now because we have too rigid rules. It's too difficult to get stuff done. And we're not allocating enough capital to next generation technology that can help boost growth. Whereas if you're in a world where you have 2 or 3% annual economic growth, the returns you can get are much bigger because you're creating much more wealth in society.
Yeah, I agree. But my point is performance. We as managers need to show the performance that justifies the pension trustees allocating money to us. Those numbers are
100%.
Those money,
100%.
those returns I just quoted are largely US funds. This is why people often talk about EU and US venture being comparable at the cohort level in terms of returns, which more or less it is. But if you look at the top decile or the top 5%, it's very, very different. It's very difficult to access top 5% US venture for the reasons I just said. Like it's, the slots are allocated. But if European funds, where there is still room, could start to actually generate those kind of IRR numbers, 35, 40, 45%, then you're sitting at a pension. Then at that point, it's criminal as a pension trustee not to invest in that stuff.
This feels very catch-22 though, Lomax. This feels like, I'm not going to give you a credit card until you've got credit kind of thing.
It's a bit catch-22. Yeah.
We need the allocations to create, which has already begun without them, but we need the allocations to then create the next generation of winners, which then recycles back through the network. So I don't know how you break that cycle unless somebody goes, do you know what? We're going to force you, or we're going to make it so sexy and incentivized to do so, or something.
There are two other aspects to it. I think is one is UK pensions are incredibly expensive for the taxpayer. It costs the Treasury 40 to 50 billion pounds every year in subsidies and tax rebates for people to pay into pensions. And is it then fair that cash is turned around and invested in large cap US equities? Maybe not. Do we need to subsidize provision of capital to Meta and Nvidia? Probably not, right? So you can get the tax break, but funds have to be invested in productive assets here in Europe. I think it's not an unreasonable expectation to
that's part
make.
of the kickback though, isn't it, Mads? That's part of the rejection of this kind of,
I think there's a huge difference between forcing people to do something and saying, if you want the incentive, which is a very generous incentive, it's one of the biggest cost line items in the budget. We're gonna have to do something in return.
Yeah, I think that makes complete sense.
So something caught my eye in the papers today. So a pension fund, I don't know if you saw this, guys, a pension fund of more than 10,000 German dentists, I need to keep a straight face when I say this, is now suing
You're not going to throw in a 230 joke, are you? I don't know where you're going with this.
Is suing the pensioners, are suing the managers of a 2 billion euro pension fund for investment losses of over 1 billion. So half the fund, right? Because they made a bunch of dodgy investments in, wait for it, venture capital. Which goes back to my performance. Now, when I look at the actual investments they made, it included a shrimp farm and some slightly dodgy sounding direct.
Not venture.
Well,
not venture.
Sorry, what the kind of, I guess it's what the German pension press call venture capital. And various kind of dodgy sounding direct tech companies, right? They haven't made it investing in any kind of.
I would love to have been the manager there. Wouldn't you? Like, what are we going to do? Do a shrimp farm?
Exactly. But my
cousin came with an awesome idea.
But my point is that first of all, that kind of story doesn't really help anything what we're doing here. But you really need to show performance, and you need to show that good money can be made, and that there is a deserved right in all of these portfolios for an allocation to what is an amazing asset class.
I'm kind of with you, but we're not just talking about venture here. We're talking about all kinds of privates, of which venture for most will be a very small part, but you've still got to be part of this. Surely that's part of a diversified portfolio. Surely that's the whole point, is that you're going to have a little bit of the crazy risky and then the less risky privates and all the growth or whatever it might be, and all up into the public. So I don't see why that can't be in much more of a natural thing. But we're going to stick with markets because the FTSE this week hit 10,000 for the first time ever. And one thing that I didn't realize, because it's almost ignored and there is no fanfare, is that the FTSE actually beat the S&P 500. That's right, Matt, isn't it?
Yes, depending on which currency you use, etc. I mean, obviously, we've had the benefit of defense really rallying, and the UK, the FTSE 100 is defense heavy. You've had Babcock, you've had Rolls-Royce, you've had BAE Systems, have all been absolutely skyrocketing.
Okay, well, that's awesome, isn't it? Shouldn't we be celebrating? Shouldn't we be opening the champagne and popping corks? Blimey.
It's a good thing. Does it tell us very much about the future wealth of the United Kingdom? I don't know.
No.
I think some of the defense stuff might be more transient. I'm not sure the Babcock is going to turn into the growth engine that's going to drive UK GDP going forward. But yes, it's a good thing. Fine.
I'm still
What's
chalking the win, baby. Sorry, Lomax, you go.
But hang on, pop quiz. What's the percentage of technology in the FTSE 100?
0.1,
Come on,
0.3.
right. Don't ruin my joke, but it's 1%, right?
Is it 1?
What is it? A S&P 500? Well, I guess it's obviously so driven by Mag 500, but it's Mag 7, but it's 30, 35. Yeah.
Well, 30 is just the Mag 7, right? It's 30%.
Yes.
Yeah,
So
so
yeah,
it's got to be a little bit more than that. I'm always intrigued by the notion of what would have happened to Trump's policies and what would have happened to tariffs if AI wasn't part of the picture. Because I can't help but think that AI has supported Trump's policies, because I cannot, surely if the Mag 7 didn't exist, the effect on the S&P from tariffs and all of the other exposure that would have hit more trad businesses would have been massive. Surely. I don't know, Madsy, this is your world, not mine.
Well, yeah, but also, Trump's been flouting the GDP growth in the US in the last year. Like, how much of that was driven by AI and the data center?
It's all AI. I mean, it's all tech. It's all AI, which is great.
Here we
They've
go,
got it,
Matt.
and I
He's
get
shaking
it.
his head.
It's government fiscal stimulus. Okay, you're running 6% fiscal deficit.
Yeah.
And you're achieving, 2 to 3% growth.
That debt has got to be from going somewhere, right?
No, of course. I mean, that's how GDP works. You know, the government spends money, it sort of, right, it pushes up GDP.
Yeah. Okay. Psychedelics. Let's get all woo and a wee. Lomax, what's happening with psychedelics this week?
Here is that let's go back. And when we made predictions last week, I said biotech is having a really good moment. Biotech was in.
Are you now talking your own book? Is that where we're going?
Well, yeah, no, I'll do that. I've got a deal we're going to announce soon that I am going to talk my own book on soon, but not today. Look, biotech was in the doldrums 2 years ago. Absolutely, like loads of companies, biotech, actual drug companies trading below cash, which meant that the market cap value of the company was below the cash they held on the balance sheet. Totally crazy. At the same time, digital health companies are really, really struggling. We're not going to talk about that now, but hims and hers, everything was in the doldrums 2 years ago. People talked it down, thought it was over. Now, what's happening now? The S&P XBI ETF for biotech was up 35% last year. So actually had a quietly, behind the scenes, had a really, really good year. And that continued. And I predicted this is going to continue this year. Now, psychedelics is a small part of biotech, right? Biotech, we talk about GLP-1s, we talk about oncology, we talk about, drugs targeting chronic conditions, etc. Like, but psychedelics is a small area. It does target a hugely important area, which is largely, mental health, right? Which is becoming a bigger and bigger, which is both characterized by legacy drugs and medicines. There hasn't really been any big breakthroughs in mental health, and also now is like a much bigger part of the health budget in countries, right? So psychedelics is having a moment as well. And this week, Bright Minds Biotech, which is actually a Canadian company, but psychedelics is relevant because two of the biggest companies in psychedelics are in Europe, had a positive readout on a phase 2 trial for a compound targeting extreme child epilepsy. This is a synthetic compound that they developed called BMB 101. It's non-hallucinogenic, so it's kind of psychedelics adjacent, but it's
psychedelics light.
Psychedelics light. Interestingly, the comp here is a company called GW Pharma, which you may remember was a UK company founded by Dr. Jeffrey Guy, who I think was called like Dr. Cannabis or something by the Daily Mail, which sold for $7 billion 3 years ago, right, to Jazz Pharma, which was taking cannabinoids, like part of the broader cannabis family. They actually had a drug for also childhood epilepsy, right? So this is kind of a comp, and that sold for $7 billion. So Bright Minds, listen to this. Bright Minds was trading at 1.3 Canadian dollars a share in middle of 24. It's now trading at $130 a share. Well, 100x in 18 months.
Lucky
right?
I bought some.
Look, and then Compass, at the same time, just why psychedelics is having a bit of a week, Compass Pathways, which is a UK company, which is actually taking psilocybin, which is the active component of what we call, magic mushrooms, which is applying that to PTSD and to TRD, which is treatment-resistant depression. This week got what we call IND, so investigational new drug applications. You get the approval from the FDA to start in-person clinical trials for one of their compounds, and their stock is up as well. So
more. We're going to see more in psychedelics. We're going to see
think,
more,
and there are some big trials
bio.
reading out this year. I think, look, this is part of, I will probably be beating this drum a bit this year. There's lots of really cool stuff happening across both sides of the Atlantic. The broader, more depressing story is that China is just, jumped past everyone in biotech, and everyone's kind of missed that. So we can talk about that another time. But generally, this is a cool time.
That's okay. Bit of competition is no bad thing. So bring it on, I say.
Well, I do think that at some point, Trump, when he's got through his big agenda list, is going to get to biotech and realize, shit, we need to invest a lot more money here because the Chinese have now totally stolen a massive market.
Only if there's a grift in it for him, if he can build a little Trump uni hotel plaza somewhere.
Always, yeah, there's always a way.
Staying with the States, staying in gambling territory. I'm trying to, can you feel my segue here? CES is happening right now, or just finished, I think, CES 26. Now, this is a consumer electronics show, but there's a lot of non-consumery stuff happening, and AI being everywhere, all over the place with either mobility or robotics, and Intel, Qualcomm, AMD, and Nvidia all had new releases. So obviously silicon is a big part of our future, as everybody knows. Interesting fact, China is the world's largest market for semiconductors. I can only find 24 figures, but they were roughly at 350 billion, twice the size of the US and 5 times the size of Europe. I'm sure 25, maybe the proportions are the same, but the numbers would have changed. And no surprise, Nvidia's announcements, I think, made the most waves. What really piqued my interest the most was the self-driving car software, where they're open sourcing not only the models, but also the data. Mads, tell us more about Alpamayo.
Well, so firstly, Alpamayo is really cool. So it's full stack, full software stack for autonomous driving. And it's named after the Alpamayo mountain peak in Peru, because that mountain peak is notoriously hard to climb, say people who have done it. And so is making cars drive by themselves. It's notoriously hard. It's a hard to scale problem. And that's why it was named thusly. It contains a number of things, Alpamayo. It contains some beautiful VLA reasoning models that can map what car sees, kind of the context and then driving actions. And it's got the emphasis on handling this long tail of tricky scenarios that are always very difficult. Elon Musk, he was out quickly saying, yeah, it's super easy to get autonomous cars to the first 99%. And then that last 1% you spend on working for 10 years.
Any risk for Tesla in this?
I think there's risk for Tesla and Waymo and everybody else in the sense that it is a competing technology. If you're Wave, this could be directly competitive with Wave. Now, we know that Nvidia have also invested in Wave, and we know that they're kind of the beautiful arms dealer, it's arms merchant that sells to everybody, and now also have launched their own technology. It's really, really cool that they are announcing this together with Mercedes, and they are announcing that they're shipping Level 2 automation, so that's supervised steering and braking, in the next 1 to 2 quarters. So it's coming out very, very soon. Of course, it's just Level 2. It's still supervised by humans, but they're saying Level 4 should be 2027.
Of course. Next year, baby. Next year. Everything is next year.
Well, yeah, exactly. Now, Jensen is all about physical AI, as we know. He's been talking about that for a little while. They were running the manufacturing cloud. They had this whole omniverse technology where they were saying, look, we'll work with manufacturers to provide clever physical AI models that they can use to create and simulate digital twins and other things. That didn't work out very well. They spent hundreds of millions of dollars doing it. There was very limited demand. People in the industry were saying that the software wasn't very good. It was quite clunky, and there was a gap between the vision and the execution. And it turns out that making this software is a lot harder than people might think. So Nvidia, obviously, world leader in the semiconductors and in all the software that sits on top of the GPUs to make them work. But then there are the applications on top, and they haven't had a very good track record there. So
it feels like a weird one to do, Mads. It feels like a weird focus, self-driving cars.
If you ask Jensen, he will say that physical AI is the biggest opportunity in the world, far bigger than GPUs, far bigger than anything else we touch. And that is his roadmap, and that's where he wants to go.
So is this a hedge? Value. Is this a hedge, or is this a genuine direction? Are we going to see more apps out of Nvidia?
Well, they've now done manufacturing in a number of adjacent sectors. They've looked at logistics, and they're in automotive. So this is absolutely what they're trying to do, but in partnership with others. But you're right. I mean, the chips are crushing it. $148 billion revenue, and kind of in the first 9 months of the last year. But the vertical software applications have not done quite as well. Alpamayo might be different, right? It's focused on one domain, just driving, as opposed to kind of many, many different manufacturing domains. And Mercedes is shipping. Look, we're saying we're going to ship this year. So hopefully it'll work.
Well, the German automotive, I've just got a new car and I was trying the assisted, I'm doing my air quotes for those that are listening, not watching, assisted driving mode, which is shit in bad weather. It cannot track the roads at night in the rain. You're pulled all over the place. I'm like, okay, we need, obviously having read the notes on Jensen's release on Alfa Romeo, I thought, yeah, we need something hopefully smarter, especially for the German automotive, because I know they're so far behind the Chinese. Talk about China, Mads, very quickly. They are now they've approved the sales of the H200s. Is that right?
The expectation is that it could happen as soon as this quarter. It was the big battleground. First, the Chinese were buying lots of GPUs. The Americans say you can't have the good ones. You can only have some cut down ones, and you can't have any. And then you can't have them anyway. And the Chinese were saying, well, we don't want them because we got our own stuff. Huawei is building their Ascend chips. They're manufactured over by SMIC. We can design them. We can manufacture them. It's all great. Turns out it's really, really hard. The yields have been low. The performance has not quite been there. And they're struggling with memory. They can't get enough memory to make enough chips. And so,
isn't there a RAM shortage, talking about memory?
There's a global shortage. And what the big Western manufacturers have done is they've just bought everything. Samsung, SK Hynix, they're sold out. Like, you can't get allocation. The Chinese can't get allocation. So even if they can make the semiconductors, they can't get the memory to put on top of it. So it's a tricky situation. And which is what has happened is the quote unquote, the Chinese frontier labs, right? So their labs building the open source models have put pressure on the Chinese government to say, listen, you got to let us have some of the good stuff from Nvidia.
Anything else from CES caught your eye?
There is the whole discussion between AMD and OpenAI.
Yeah, they're back. AMD, I thought were gonna fall back into the shadows.
They are back. They are about a generation behind Nvidia in terms of performance. They brought out the MI300. It was on spec, looked good, but the software was just not nearly as slick as Nvidia's CUDA. And what I mean here by the software is the software that sits on top of the GPU and compiles kind of what a software developer will code when you kind of maybe using PyTorch, when they make the LLM or kind of the AI model, and then compile that into the machine code that runs on the chips. And the technology that NVIDIA has got for doing that is just, they've got 20 years of experience in it. It's just much, much better than anything AMD has got.
I also saw Intel were back as well. They had a few announcements. It also felt a little bit like clutching at straws as well. I don't know if that's fair.
I guess they wanted to sign chips, but they also still have some manufacturing capability, and they're of course far, far behind the Taiwanese manufacturers. But I think important from that perspective, from a US angle.
Yeah. Any notes on Grok?
The note is that it's hard to, just taking a step back, what's happened with Grok? Grok it's been announced, raised $20 billion at a $230 billion valuation.
And this is Grok with a K, by the way, not Grok with a Q.
Which was also sold for $20 billion to NVIDIA. It seems that 20 bill is the new, what's 20 B between friends?
Exactly. It just drops out my back pocket, baby. Don't worry about it.
Exactly. Now, we've seen OpenAI and Anthropic raise at perhaps lofty valuations, but with very, very strong growth rates that you could see grow into those valuations over the next 12 to 18 months. It looks like Grok, so Elon Musk's AI, is raising at somewhere between, depending on what kind of revenue numbers you believe, somewhere between 400 and 700 times revenue, which feels lofty. X might have 600 million users, but Grok's just got a small fraction of that, I think 30 million MAUs. So it's hard to see that this is a fundamentals-based valuation right now, but it's Elon Musk, and there might be stuff going on that we don't know. I think it's great that there are 4 models, by the way. There's been some really nasty stuff. I think some of the stuff around, especially the image generation, some of the deep fakes that are happening on Grok.
But that's because they're running fast, right? So they're just running with not much due care and attention, just running at walls, huh?
Yeah, and I actually have a lot of sympathy with that. There's the running fast and running at walls, but there's also a view that there should be less censorship in the models. And we've seen some of the other model companies veer the other way, where the model spat out stupid, dumb stuff or couldn't talk to you about important things because we can't comment on political matters.
I'm sure we've all encompassed that. I've experienced that a lot, especially recently, where you're like, well, I'm asking you to do like a document scan, not like find nasty things on the web, and there are often little bricks in the way.
100%. Whereas Musk is much more unapologetic free speech. I think some of the image gen stuff is inexcusable, and they need to clean that up ASAP. But it's clear he's got, definite star power and has attracted a good round at a very premium valuation.
Crazies. Well, the last on my AI list, Mads, was the Claude Code. All the Google engineers basically fessing up to using Claude Code. Have you got any thoughts on this one?
No, just it's really interesting. I mean, they were saying, look, it was hard for us to pick a direction, and we had different initiatives doing different things and developing software inside of Google. And then Claude Code helped us mock it up in an hour and spit out code that was performant very quickly. It's not the final product, but it took us very far in a very, very short span of time.
Kind of use whatever toolkits you need, guys. Let's get to the goal. Let's get to the checkered flag.
Let's not forget, Google is a major Anthropic investor.
Well, everyone's an investor in everyone, and everyone's investing in feed. So I've lost track of the circuits of cash. Well, wonderful. Okay, my boys and girls, deals of the week. Lomax, what's your deal of the week?
We had a big exit in the UK this week. What? Faculty. I know. Faculty
again,
in UK,
no PR. Again, no noise, right?
I don't know. It cropped up a bit for me, but it was in quite a lot of the major publications. Anyway, UK AI specialist that builds enterprise-grade AI systems and decision intelligence tools, also to be vague as far as I can tell. But they've sold for reportedly $1 billion to Accenture. I think Accenture basically buying cash. So it's in cash. I'm sure there's a lot of earnout in there. They already raised $50 to $60 million, actually.
Nice.
The Series A or Series B, Apex, Local Globe, Mercury. Here he is again, talking about Google being everywhere on the cap table. Jan Tallinn, also on the cap table. He was one of the seed investors in Anthropic, right? He's the co-founder of Wise, right? Out of Estonia. So good for these guys. It's $1 billion exit. I mean, go back to 2014 when DeepMind sold for much less than that. And it was one of the biggest exits.
Have you guys watched the is it the learning game? What's the demos?
Yeah.
I watched
Thinking
it the
Game.
other day. Thinking Game,
Yeah.
sorry, yeah.
It's extraordinary.
Nice.
It's extraordinary.
What a lovely chap. What an interesting story. Yeah, if you haven't seen the Thinking Game, it's the Demis Hassabis, the founder of DeepMind. It's a lot about him, but obviously a lot about the business and what they're up to. I thought it was a really, really lovely story. I think it's only on YouTube, or was it Netflix to YouTube? I saw it on YouTube.
You can see it in lots of places. It is a kind of a full length movie, but what Google did, I think 6 weeks ago, basically said is, listen, it's a good movie. You should all be allowed to see it. Here it is for free. Yeah. And within 4 weeks, it had garnered 230 million views, which is pretty good for a full film, right? Yeah.
And it was lovely hearing the story about all the investors trying to drag him to Silicon Valley. It's like, no, the R&D is here in the UK. We're going to stay here and build a world-changing business, and so mission-centric.
Yeah,
it was just lovely. I loved everything about it. Anyway, my deal of the week was...
Sorry, Jan Tallinn is Skype, not Wise. I'm confusing my Estonian.
Jan Tallinn from Tallinn.
Well, there you go. That's for sure.
My deal of the week was Kraken out of Octopus, so we won't go into that because I've already done that. But Mads, you're going to talk our book, my love.
We had a lovely announcement come out from the team over at Biographica. Cersei and Dom are building a fantastic business. They announced they've raised $8 million to build some super, super cool technology that can help develop next generation crops. We all need to eat, and we need to eat well. And we have problems with things like climate change and pesticides and things we don't necessarily like. And what the Biographica team is doing is helping us develop next generation crops that are more resistant to pests, so we need fewer pesticides, and more resistant to drought, so we can better weather climate change and still grow good food. And it's just a wonderful thing, and a fantastic team doing great work.
Love it. All right, my gents.
Fantastic.
I will catch you all next week. All love, health, and light.
Bye-bye.
Love you both. All the best.
Outside.